Hi everyone, Basil Chapman sitting in for the one and only Tom O'Brien, who's on a birthday afternoon vacation. I hope he enjoys it. Well deserved. I know a harder working person than Tom. And let's go to the market. Now the Dow was down 101 points. This is very important because at 23,461, it closed just underneath the 9-period exponential moving average. See, this is the daily chart here on the left. In the middle is the weekly. On the right is the monthly. Monthly is spectacular, just beautiful, beautiful pattern. Let's see what happens in November. But what's really important is the weekly chart is bumping into resistance, very strong technicals. And on the daily chart, look at the low. The low went to 23,310. If you're looking at this black line, you'll see that since the breakout, November the 11th, the Dow is not at 21,927. The Dow is not closed under this 9-period moving average until today, the very first time. So for my opening call subscribers, we were fortunate because some subscribers have been long from 22,290 position. And we recently went to the short side. We added some to the short side today. Why? Because we were anticipating that the Dow would test the 9-period moving average from yesterday's close and could even then, if it broke it, could even hit the 20-period. Wait a minute, the 20-period, that's this pink line right here. It hit it exactly, but then it rebounded strongly. So I want to go through a couple of things here as we go through the numbers. So the parameters I'm looking at, if the Dow goes to 23,520s tomorrow, that's pretty darn good action. If instead there's just an unchanged Friday close or a down close of minus 60 or more, that's suggesting we have begun the consolidation phase, which is what the technicals are indicating in the daily. Weekly chart, still there's not a sign yet of some kind of a short-term top even. So until the Dow cracks the 23,100, 23,000 support, the weekly chart is still going to be acting very well. The S&P, SPX.X, the S&P right now is down 9.76 at 2584. It has closed below the 9-period moving average. That was that big shocker on the 25th of October. Dow was sharply down, and then it came back and then ran higher, and then it never looked back. In fact, it's been going higher since then. Today, the low of the S&P at 2566 tested the high, which was 2567 on the 25th. And then it rebounded. So a lot's going to happen. A lot's going to happen also because of NVIDIA, which has been very instrumental in the SMHs, the semiconductor ETF. This is the iShares trading at 102.27 down 2. This is the deepest correction it's had in the daily chart in a long time. It closed just under the 9-period moving average, first time in a long time. Weekly chart is still spectacularly good, and the monthly chart is tremendous. So that's saying that if NVIDIA impacts one of the best of the semiconductors, if it impacts when the earnings come out at 5 o'clock in another 50 minutes or so, if it impacts the market negatively, the SMHs, and I believe the SMHs led the market up and down all year. So if they start to pull back sharply here and the SMHs break under 101 by Monday or Tuesday, then what we're looking at is, for the first time, we're looking at some kind of lower highs, lower lows consolidation rather than this high-level rotational correction, which just goes sideways as one sector corrects and the other sector that had been weak strengthens. This has been the name of the game for a long time. So NVIDIA trading right now, NVDA's had a lot of volatility. Even since the close, it's down 2. I don't believe the earnings are out yet. I think it's got another 50 minutes to go. So it made a peak in the daily chart on the 7th, a few days ago, at 212.90, trading now at 205.32. Hit 200.37 this morning. So that is a lot of volatility, but it is how the market reacts to whatever. There is no room. This is priced for perfection. There is no room for a mistake. If there is, in fact, some kind of a miss, that miss is going to suggest that the SMHs will be coming down. And of course, there you've got Applied Materials at a spectacular move until recently. It made a high of 57.34. I call it a peak E in the Chapman wave. And now it's trading at 55.48. So no big deal, 2 points, but it's the arching formation. Look at this arch formation. It's just a heads up to say, hey, watch out, because a close below 54 in the next 2 days would suggest that finally the daily chart at least is going to go to a sell signal to sell mode. Mode is deeper than a sell signal, and then you'll impact the weekly chart. However, you've got to also include the you've got to include LRCX, which is Lamb Research. Lamb Research trading at 206.29. Whoops, now it's at 31. Down almost 5 points today, but still a high-level consolidation, really a more rectangle formation. So Lamb Research goes to 212. That's a really good action. Lamb Research goes to, from 206 right now, goes underneath the candle of the 1st of November, under 200. And that's in the next 3-4 days. That's saying, uh-oh, time for a consolidation. So now let's go to the IWM, which is the Russell 2000. Had a pretty decent day in terms of not closing as badly as the others, down 0.25%. The others were down 0.40, 0.30 or more. We're looking at a leg E to the downside, and to make it real simple, if the IWM at 146.83 can push above 147.20 anytime tomorrow or Monday, that's going to be not bad action. Not great, but not bad. If it goes to the 148s by Tuesday, that's saying, hey, you know what? The rotation says the bigger caps can start to pull back. The IWM, the smaller caps can start to have a little bit, because the smaller caps have been pulling back since the top was made back on the 9th of October. Now, this is going to be very interesting, because within the context of the markets, gold had a kind of a nice day. It's had rising highs, making a kind of a U-shaped pattern at 1286. Up $3. If gold really needs to get above 1295, I'd even say 1297, to say, aha, now gold is going to have a pretty decent rally. I've been thinking, and I've been telling my subscribers to my opening call, daily newsletter, that I think that the dollar, which we've been long from the day of the low, the 70-week low, we picked that exact day with the left side, right side price time match right there at 91.01. We decided that was a perfect time to go long. So we're looking at the dollar showing strength in the weekly chart, maybe a little more strength than gold in the intermediate term. So it's going to be important to see if gold breaks about 9 points higher and the dollar goes about 70 points lower. Then I think you've got a change in trend. Basil Chapman sitting in for Tom O'Brien. I'll be right back.